Actually, it is 1:30 in the afternoon on Wednesday, October 30th. I figured I'd hop on here because it's been a few days. It's now Wednesday. I lost my property tax appeal. I did get to the Giants game after a ton of issues. I'll go about that in another podcast. But I did just have IHOP pancakes. So today turned out to be a pretty good day. I was gone Monday and Tuesday, and today's Wednesday. You can see this is Friday. There is Monday, the 28th, and there is Tuesday, the 29th, and then we have today, the 30th. We're kind of butting up against that all-time high at 498. Now, there's a lot that's gone on, a ton that has gone on. And I'm going to go over here. This is the link tree. Down below is the link. You can go over here. I'll pull up the newsletter because I did do a live yesterday for Google's earnings. I'm going to do a live again at 4 p.m. tonight for Meta and Microsoft earnings. But you can download the app. It's a great app. I actually use it a lot to just kind of mindlessly scroll. I think it's far better than any of the other social media apps because I think it gives you information versus just news and stuff like that. And you can find Substacks that are interesting to subscribe to, but I will be going live on that app. Now, in the last paid one, I went over Ford and I thought Ford had an opportunity. So Ford got killed. Absolutely crushed on earnings. We can go and we can look at the chart. By the way, the algorithm still has you in, just so you know, here at 460. So it's still running on the Qs. And the MACD is reset. Doesn't look like anything's really going on with that one. But Ford, I had mentioned in the paid newsletter that I thought it would do well. Now, the algorithm got you out with a 2.3% loss. I had said this 1066 was a little concerning and that getting up there to the 200-day was a little concerning. It created a gap. And the gap was from 1062 all the way up to 1131. You're starting to fill that. Now, were the earnings good? No. They have warranty issues. Imagine a shitty car company building a shitty car and having to fix them. That's Ford. They also have very poor EV kind of outlook, and they're still doubling down on it, and the costs are killing them. But what I find interesting, and I did bring up in my analysis on the paid newsletter, I brought up Ford versus GM. And so here you can see, GM hasn't been a fantastic trade over the last 3 years. It's down 5%. That blue line is the S&P. That's the S&P. Over 3 years, you're up 26% on the S&P. GM is down 5%. Ford is down 41%. Okay? It's a shit show. It's a good trade, not something you hold on to. But what I want to point out is look at how Ford and GM trade in tandem. And when Ford has gotten down, when GM was down, Ford came down to meet it. Now that GM has been going up, will Ford come up to meet it or will GM come down? One or the other. GM is an alpha pick stock. And I went over the previous episode, had all about alpha picks. I went big on alpha picks. I went rather large on alpha picks. It's up. That portfolio's up. I bought Friday. It was a good move. I was buying at all-time highs. It was a good move. But I wanted to point out that one. Now, let's go over. No, I'm not going to go over Google in a little bit. But I want to tell you about one that I found yesterday. And while I was live, I bought more. I bought some. I think I bought like $500. It's not a big position. But I saw the CEO on CNBC last night, and they do genetic testing for infants. And I really liked the story. And so I kind of saw it. And then while I was live on Substack, I think Patty or somebody had brought it up. I forget exactly who. But they said, what do you think about this one? And I said, it's an interesting one. Now, what's really interesting is that the algorithm here makes you 374% versus 160%. And again, if you want this algorithm, go to the link tree on the top there. It's Trendspider, okay? You sign up for Trendspider. You get to a page like this. You sign up, and then you use the link tree and go back and email me, and you get this 4-hour algorithm. And again, the 4-hour algorithm over 24 months, 27 positions, okay, it makes you 374% in this stock, WGS, which is Gene DX Holdings Corp. Okay, I like this one. I bought it yesterday. I think I got it at like $83 or $84. It's trading at $79. Yes, I bought the hype. But when you pull up a weekly of this, okay, that 200-day that just started is at 122. And this is what I was looking at. Now, it's completely overbought. It's a small cap, bio cap stock. It is one of these YOLO ones. So $500 may turn into $1,000, but I'm not going super big on this one. I'm just putting about $500 into this. And if it goes to $1,000, I'm perfectly happy. But I'm not going big on this. The actual valuation of this does not make sense, even though I will tell you, WGS, just so you know, is a strong buy in the Seeking Alpha Quant. And the quant beats the S&P, okay? Historically, the quant beats S&P. And in the healthcare services, WGS is the number 1 out of 57 healthcare services stock, okay? And all these analysts think it's a buy. When you go to Wall Street, okay, the average price target is 76. That's what you have to know. There are only 6 analysts that cover this, and they've chased it down. They've chased it all the way down. So understand that this is just a risky one. I saw them, and they're not making money. They are not making money. It has a market cap of $2.26 billion. It is a tiny, tiny company. But I like this weekly chart, and I just decided, you know what? I'm going to take the chance on it. They were up because of their earnings. There's a lot to it. If you like it, it's WGS. Now, we'll go over to Gene Munster's take on Google. A potentially negative read on Google through NVIDIA. CapEx, Google basically yesterday, they killed it. They did a mic drop moment. Okay. Google earnings was a mic drop moment. This was so good. They were expecting 11% growth on search. They actually are monetizing search. But the read through that Gene Munster's talking about is they said they're going to be, I forget the actual word, productive, or they're going to cut back their CapEx spending. Where does that cut back? Probably chips. A potential negative read-through for NVIDIA. This might get picked up as negative on NVIDIA, given expectations are that CapEx comments from hyperscalers should be up and to the right. These guys are cutting. My take, I think NVIDIA's numbers will be fine because the AI growth will spread out past the hyperscalers in quarters to come. And separately, NVIDIA can't keep up with demand for the next several quarters. And we saw that in AMD. We'll get to AMD, but we saw that in AMD. Here are the numbers so you can make up your own mind. In June 24, Google grew CapEx at 91%, and NVIDIA grew revenue in their August 24 by 122%. Google guided CapEx to grow at 18% in December 24, compared to NVIDIA's, which is expected to grow at 65% in January 2025. So he's reading through this saying, hey, the difference is going to be made up. So if you're invested in NVIDIA, don't worry. I think there's plenty of space for these guys to actually make things up. And it's getting a little bit of a button hook. So if you wanted to pull some off the tables at 140, I don't think it's past it. But again, Google's moment, we talked about it before, how this gap up here to 183, it hit it. It hit it. It filled it. It filled it. I don't know if it was pre-market or if it was post-market. Let's see. It got to 183.78. Boy, where's that gap? 183. So you've got 183. You had 183 in the stock when it was 170 here. Did you buy it? Because I said this was the best opportunity. I said I was a little bit worried about growth or search. They told you exactly what it was. I said, hey, this is the number top 3 holding. I forget in my portfolio. I held on to it. I did well. Now, Reddit. This is one that came out of left field. I still don't know if I believe in Reddit. But strong user engagement drives Reddit's robust results, hits record high. It's up 38% today. 38% at 113. I would not buy this. The valuation makes absolutely no sense to me. None. Not making money. 51 times forward earnings. When you look at growth, they are growing tremendously. When you look at profitability, they're making money profitably. They're still not EBITDA positive, but they probably will be at some point in time. Strong user growth usually means that, hey, it's going to happen. Snap, same thing. I do own Snap, small position. I do own it. It's up 14% today. But Reddit, oh my God, I couldn't read through it. I can't believe that it's up that high. It is what it is. Let's see. This was interesting. Eyes on NVIDIA. Historically, and if you had Trendspider, you knew this without me being on the air. Historically, this week has been the strongest of the year for NVIDIA. 79% win rate and an average return of 4.89%. Let's take a look at where we started the week, because I think we started the week, let's see, it was August 28th at 9:30. We opened up at 143. You're at 139. Could that come back? If Meta and Microsoft announced their CapEx was just tremendously, we spent record amounts. Guess where it's going? NVIDIA. Guess who sold out all of next year's chips? NVIDIA. Guess who's pulling back on chips? Google. But not by that much. They're not saying, hey, we're not going to spend. And then you get AMD's results. AMD wasn't doing like fantastic. I do think that the reaction in AMD is an overreaction. But again, that's kind of the thing. Snap right there. But NVIDIA, you can look at the seasonality on there. I think it's a good one. Here, I'm up big on MicroStrategy. Let's just put it that way. Now, a common misperception about Bollinger Bands, and I talk about this all the time, is that you fade when it comes close to the upper bands. That's not the case for Bitcoin. Okay? The strategy here is to buy when it pierces the upper end of the Bollinger Bands. The strategy buys on it to close above the upper band, exiting at either +6 or -3%. You can build this in Trendspider. You can build it in Trendspider. Past 24 months, total return +68%. Your drawdown, 10%. Your win rate, 53% of the time. So again, Bollinger Bands, buy it, sell it when it gets out. Look at all those pluses right there. That's what wins it. You can see there's a couple of losses in there. There is no strategy that's perfect. But I thought this was interesting. Again, if you want to build it, you can easily put that into the ChatGPT portion of Trendspider and get it. Now, let's talk about what I came here to talk about, Supermicro. This is down 34% today. This is a complete shit show. Their accountants left. Their accountants, Ernst & Young, sent the members of the audit committee board a letter of resignation on October 24th. Supermicro didn't disclose this. Ernst & Young didn't disclose this. They had to disclose it today, but it was October. This was 6 days ago. Although the company recognized Ernst & Young's decision is final, it disagrees with Ernst & Young's decision to resign as the company's independent registered public accounting firm. The special committee has not yet obtained all information relevant for the review and has not concluded the review. So this is the committee that's looking over the fact that the SMCI hasn't filed a 10K. And then the auditors leave. And FYI, this is one of the big winners in the AlphaPix portfolio. And the AlphaPix portfolio is up 155% versus the S&P at 53. FYI, they sold Supermicro today. That picture right there very well may come down. They are still selling at an enormous profit. But what am I doing? I took it out of the core portfolio for this reason. And I said, I'm holding on with house money. So anything that I make is good. But when you saw it break this trend line up, and it's trying to make its way back, but where did the stock price go? Where are you trading today? 32. Look at what it's using as its support. It's this downward trend line. So am I going to get out of it? I'll probably hold off because this downward trend line, while it's a trend line down, if it holds that trend line, then my assumption is I can sell it for a little higher price. I don't know when. Their earnings are coming up. Let's see, November 12th. Maybe they have November 12th. They have some good news for us. But until then, this is an absolute shit show. Suffers suspension, but the AI trade moves on. Rival Dell is up 8%. Okay, Hewlett-Packard is up 3%. NVIDIA, which is a partner of SMCI, only inched down 1%. So it's not taking the rest of the AI trade with it. So it is super, super just sketchy. The analysts at Needham suspended coverage on Supermicro today after the investment firm had previously given a buy rating. Not only does Ernst & Young's resignation raise considerable questions about the validity of SMCI's current and past financial statements, but it also raises significant questions about Supermicro's corporate governance and management commitment to integrity and ethical values. That's huge, because we know one of the things that was brought out in that Hindenburg report is that the brother-in-law or brother owns a rival company that gave favorable terms to hardware, and that Supermicro was able to boost their earnings based on that. So it's not. Wells Fargo now believes Supermicro will likely be unable to file its fiscal 2024 statements in time. We see the resignation of SMCI's independent auditor as materially decreasing the odds that SMCI will be able to file its fiscal 2024 financial statements. They may not have earnings. So you may see this one very well break that support. I just find it funny that it's using that red support line that we saw. Old resistance turns into new support. So again, we had this nice little breakout here, which was an opportunity to try and get some money back. But if you didn't, I'm not selling today, but I'm out. This is the exact reason I pulled it out of the core portfolio, and they removed it. So I like this one. I'm a little bit quicker probably than Alpha Picks. Alpha Picks they wrote you a summary and they said, hey, there's corporate governance issues here. Now, Lilly is a different one. Lilly offered guidance that was short and shocked the street. This was down huge. It's now only down 8%. Again, I say, if you can get this under $900, get it. Here's what it's very confusing, and I didn't listen to the CEO call. I typically don't go in and do a deep dive on this shit. I usually just headline read, and I basically know enough to know, hey, I should get into this or I should get out of it. And I trust my gut on that one, and I look at charts. So let's look at the chart. The chart got you out of Lilly here with a 0.87%. Now, the algorithm makes you 73%. Buy and hold makes you 129%. So I'm looking for an entry here. I'm looking for an entry. And where did it trade down to this morning? It traded down to $769, under $800. Do I want to buy it here? I'm going to wait for a little bit for it to shake out. But here's what I heard. I heard they couldn't meet demand for the product and that they have an abundance of supply. That's confusing as fuck. I don't understand it. I don't get it. How do you have demand that is exceeding demand, but you say you have enough supply? Here's the cryptic point of this. They couldn't meet the demand for the product. And so they say we have plenty of supply because they don't want to open the door to HIMS and the compounders. Remember, compounders sell this for like $40, and the Lilly stuff is like $800. But if they can't meet supply, then the FDA says the compounders can meet that supply. And so they open up the door to HIMS. I think it's crazy misleading. I think that you're perfectly fine in this stock. I think if you want a dollar cost average this one, I think this one stays. Again, the catalyst of the earnings was based, and they've talked about it for the last 2 weeks. I was doing stories on it about how they wanted to hold off these compounders. So again, I think this one is a buy the dip moment. You're back at the 50-day. Notice how the 50-day is used there as support. I think if you want to buy this at around, $800 and you want to start adding to it, or if you want a dollar cost average your way because you've already bought it at 400 and you're like, oh, I want to double down on this. It's a GLP-1 market. This one's going to win. I wouldn't worry about it. I had a friend who texted me. I literally wrote him. I said, I think this is just a ploy. I think they're trying to fight off the compounders. I think you can buy it. He bought it at $780. He said, I bought at 780 and it came all the way back to 850. Now it's coming down. If you look at a 5-minute chart of this and we just look at today, you've still got this gap up here to 901. You still got a gap. Now, the volume in the afternoon come down completely. But I do think this is an opportunity. So, Eli Lilly, I think you read this article and I think you go into it. Now, Wall Street swooning over Google's AI prowess. Boom, boom, boom. It's up 4 or 5%. I think it's a $180 stock. I think it's fine. We went over this. This was a drop the mic moment. They're monetizing AI. I don't think you're going to hear that from Microsoft today. I think you're going to hear they're still struggling with their Copilot stuff and trying to monetize that. Google has done it right. They've integrated the ads into AI, so search revenue is protected. They've also increased their memberships because they force you to use memberships to use their AI. Now, one that I think is a total overreaction, but I'm not necessarily running out to buy it, is AMD. I think this was an overreaction. I do. Yeah, I don't know how you go from projecting $2 billion in AI to projecting $5 billion of AI, and then your stock goes down. But I will tell you, it's got to do with the valuation. Why are you paying 50 times forward earnings for AMD, which has said they have problems getting Taiwan Semi to make their chips? Because guess who's paying them more? It's NVIDIA. And that's at 49 times forward earnings. So, their PEG ratio is at 1.4. AMD, their PEG ratio is at 1.23. I think this one's a buy at some point in time. I don't think I own this one outright. Wall Street says it's a buy. Their average price target is 186. That's 24% higher. Again, I think it's an overreaction. Am I running out to buy it? No. I'm probably just going to wait a couple of days here for this to settle down. But I would expect this one to come back. The algorithm has you in at 158. It makes you 51% versus 163%. But you can see how this is up and down. Look at that nice resistance. If you buy this under 164 and then sell this over 164, I think you're okay. Where's 164 come from? That is the November high. November 2021 high. It is just floundering, having problems breaking out above that. So buy it below and then trade it up. Look at how low the MACD is. It's not exploding. And I do think Q4 provides a good opportunity. Like I said, for today, I will be on Substack. So if you want to get on Substack, just go over here. You can, dailystockpick.substack.com. You can do it. Let's look at some social requests. Trenton wants me to look at Yeti. YETY. This is the only thing I know are the coolers and the coffee cups. Trading in a range for a while, earnings coming up. With interest rates going down, consumers should be more interested to buy leisure products. I think the leisure product stuff, I think that had its day, to be honest with you. The consumer's still strong. I think you're trading down on this one. The algorithm doesn't work. Now, that gap up there, 48, that's an earnings gap. Just a couple of earnings ago. So let's look at the fundamentals of Yeti. I'm not a big fan. I would never buy a Yeti product. It's too overpriced for me. But that's me. I'm not a fisherman. I know fishermen like Joe and some of the other guys who listen to the podcast. My guess is they have a Yeti because they make the best. It's like Lululemon. Once you get a Lululemon thing, you ain't getting any other clothes. But it's a super, super luxurious good. Peloton is actually the highest in this top leisure products. But let's look at Yeti. It's a hold in the quant. The quant has had it for a hold. They just got out of a hold. It had it as a buy here up at 40, and it threw it to a hold. And why does it have a hold? Valuation, 14 on the PE. That's not crazy. PEG isn't nuts. Price to sales, they're not doing great on sales. And that's where you have to come in. The growth, the levered free cash flow, they're spending too much money. 57% down on levered free cash flow. Profitability is a B, 58% profit margin. They're able to hold up their margins, but the momentum sucks. And we talk about this a lot. Momentum is a top category. So I don't know that I love it, Trenton, but, again, I'd probably stay out of this one, to be honest with you. From Spotify on Alpha Picks, Fred asked me, do you prefer selling with Alpha Picks when Alpha Picks is telling you to sell, or do you sell when your 4-hour algorithm is telling you? So I have been, since February of this year, I'm going to buy Alpha Picks, just, every now and then. I would get the Alpha Picks suggestion, and then I'd go research it in Seeking Alpha Premium. And so for me, the bundle would make sense. $639, you're saving $159. So that would make sense to me. For me though, Trenton, I mean, let's just look at SMCI. SMCI is a good example. For me, that nice gain there at 8%, I probably would have, if I had bought at 42 and it was a normal company, I probably would have sold it at 8%. But I've changed a little, okay? Because the Alpha Picks portfolio is up 100. I wasn't beating 155% by picking out which ones I wanted and then trading around the 4-hour algorithm. So in my mind going forward, because I put $50,000 into the actual portfolio, and yes, that's this one right here. I put $50,000 into the portfolio. You can read about it. I bought $50,000 of the Alpha Picks portfolio, and I tell you why, and I tell you how I did it in this podcast, okay? In this newsletter. You can go and read it, but since I put $50,000 into it, I'm going to stick by when they tell me to sell, because I have been very short-sighted, and my belief was when I did this kind of analysis in my head, I have made more money from buy and hold than from selling and picking stocks. I have made far more money buying and holding goods companies with good products, with good earnings and good management. And that's the basis of Alpha Picks. It's 2 data-driven stocks per month, one on the 1st, one on the 15th, and they tell you when to sell. So me, Fred, I think I turned a corner, and it's hard for me to actually admit that, because turning a corner means, hey, I'm giving control of my portfolio or a portfolio of stocks to someone else. But for $450, that's 1% of my $50,000. And that makes sense for me to pay 1% for 155% return. Now, past performance doesn't guarantee future, but I don't know any freaking money manager other than Kathy Woods during those crazy times that's giving you 155%. Most money managers I know, they're managing risk. They're not managing to grow. They're managing risks. We just want to beat the S&P by 1% because that's what we charge. So understand that's what it is. If you want any of this, okay, I'll be back on tomorrow morning. But just remember, this bundle is the best deal. And all of this is at Linktree, linktr.ee. It is now 2 o'clock. I will see you in 2 hours. If you're listening to this kind of live, or if you're listening to shortly, I'm going to post this right away. I'll be on live Substack 4 o'clock. If not, I will see you tomorrow morning.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.